Hi everybody. Today I'd like to talk with you about institutional investors and funds. But let me start with a short bit about my background to put some context around what I'll be sharing with you. I was a buy-side analyst in New York City for almost 20 years at two large natural resource investment funds. And at our peaks, we had billions of dollars under management. I've met hundreds of different management teams over thousands of marketing meetings, and I've also stayed very engaged with the generalists and the retail segments. My experiences have taught me how the different classes of investors think and what they need to hear in their investment processes. Because I've been around the industry for such a long time, I can also tell you that the investor pool you're talking to is changing at a pretty quick pace. Many of you are telling me you're noticing it as well. And recently at Indaba, it was reported that 80% of the remaining metals funds are now being run by generalists. The reality is that there's a large and growing segment of the investment community that has a relative lack of investment and industry understanding of natural resources. Issues like index investing, the loss of specialist funds, and the movement of traditional retail markets to other market sectors have created a growing need to talk to the remaining pool of investors in a certain way. And at Green Room Consultants, we're here to help you do that. If you have a couple minutes, please take a look at some of the other videos I put up. They'll give you some insight into the investment community and how you should be talking to it. Okay, so let's talk about your relationship with institutional investors. Now, when your market cap becomes big enough for a substantial fund investment, of course you'll want that sponsorship. But if you want to maintain a good relationship with the funds, you need to understand one thing above everything else, and that's that portfolio managers and analysts hate being embarrassed. The absolute last place a professional investor wants to be is at the morning meeting with colleagues and not be able to answer why an investment is not performing as anticipated. Now, this isn't the same thing as having a setback. All professional investors understand that there are going to be bumps in the road. But when something happens that doesn't fit into the investor's own understanding of why the company is in his portfolio, well, it causes real distress, and it doesn't matter if the cause is warranted or not. As a consequence, that equity goes to the top of the list to sell when there's a redemption. Or, worst case scenario, the distress generates a sell it now signal and figure it out later reaction. Obviously, you never want that reaction to your equity, and that's why as management, your goal is to frequently communicate with shareholders to ensure that they have a clear understanding of your value proposition. If you can do that, you'll have investors who take advantage of unwarranted price weakness and not be inclined to sell into it. Now, this surprises a lot of people. Most think that for institutional professionals, it's only about having the absolute best performers in their portfolios. Now, sure, these investment professionals, they want to have the highest possible returns. That's how they make their living. They assemble a portfolio that outperforms their competition. Outperformance allows them to market on a superior track record. And then that superior track record allows gathering of more assets under management, and of course, large-scale assets under management on which fees are charged and perhaps a percentage of profits taken. Well, that's what results in spectacular fortunes being made. But having big slugs of the absolute highest performing investment in any given year, it isn't necessary for those investors to generate superior track records. In fact, for well-respected established funds, their compliance committees are obstacles to oversized bets at the investment level. And for the generalist funds, the constraints are usually at both the industry and the individual investment level. Obviously, they do this to protect against oversized losses, because oversized losses can destroy track records. In a way, it's more about playing not to lose rather than to win for the professionals, and I know it's a bit counterintuitive, but that mentality is why it's so important to keep the investor-centric information flowing to shareholders. Investor-centric information is used to generate an increased understanding and reassurance about your company and its value proposition. Investors commit capital because of the potential returns they associate with your value proposition. So if a setback occurs, you don't want doubt in the value proposition to trigger knee-jerk selling. Now, you want those institutional investors with you until your story is fully played out. So how do you do that? I tell management teams that the most important thing that they can do is provide a very clear value proposition. Your company's value proposition, it may not make it the highest potential performer in the portfolio, but that's okay. What it really has to be is crystal clear. The second most important thing is to provide an information flow that constantly explains the company's progress and addresses any potential hurdles. To be of real use to the investor and be as effective as possible for the company, the news flow, it should reference your company's value proposition as often as possible. And how to do this is typically the hardest thing to figure out. If you rely on drill results or development timeline announcements or production results alone to communicate, you're limiting the potential participants from your investor pool, and you're not doing nearly enough to keep your investors sticky and close. And investor stickiness is the greatest quality you can hope for in an investor pool. It represents strong downside protection to your equity price without limiting the upside. Now, I don't want to get too long with this video, but obviously there's a lot more to talk about. I'm putting up other videos to help you think about some other important topics, and I hope you'll recognize there's a lot of value in getting specialist experience to assist you with your marketing efforts. So to sum up, here's my green room value proposition to you. It takes a buy-side investor to understand what a buy-side investor needs and wants to hear. And I was that buy-side investor for many years. My goal is to work with your management team and IR professionals seamlessly and at a very modest cost, and to make your marketing efforts and messaging really resonate with today's active investors. There's no reason to limit the size of the capital pool that you're addressing. I can help you talk with everybody in it. I'd love to explain more, so please reach out and email or call at 212-634-7881 and ask for Steve. We'll have a great discussion. Thanks for your time.